Today, we will talk about Global Depositary Receipt, GDR definition and example. Hi. Let's learn about Global Depositary Receipts, GDRs. A Global Depositary Receipt is a negotiable financial instrument issued by a depository bank. It represents shares in a foreign company and trades on the local stock exchanges in investors' countries. GDRs make it possible for a company, the issuer, to access investors in capital markets beyond the borders of its own country. GDRs are commonly used by issuers to raise capital from international investors through private placement or public stock offerings. A Global Depositary Receipt is very similar to an American Depositary Receipt, EDR, except that an EDR only lists shares of a foreign company in U.S. markets. A Global Depositary Receipt is a type of bank certificate that represents shares of stock in an international company. The shares underlying the GDR remain on deposit with a depository bank or custodial institution. Using GDRs, companies can raise capital from investors in countries around the world. GDRs are generally referred to as European Depositary Receipts, or EDRs, when European investors wish to trade locally the shares of companies located outside of Europe. GDR transactions tend to have lower costs than some other mechanisms that investors use to trade in foreign securities. A US-based company that wants its stock to be listed on the London and Hong Kong stock exchanges can accomplish this via a GDR. The US-based company enters into a depositary receipt agreement with the respective foreign depository banks. In turn, these banks package and issue shares to their respective stock exchanges. These activities follow the regulatory compliance regulations for both of the countries. GDRs are exchange-traded securities that are not directly backed by any underlying collateral. They instead represent ownership of shares in a foreign company, where those actual shares are traded abroad. Different GDRs may also have specific characteristics that differ from one to the next. A GDR distributed by a depository bank represents a particular number of underlying shares, anywhere from a fraction to multiple shares, in a specific international company. The particular share makeup for a GDR depends on how attractive an investment it will make to local investors. For instance, in the US, a depository bank would want to create GDRs with the number of shares, or fractions thereof, and associated US dollar value that US investors might be most comfortable with. Here are 5 key takeaways. 1. A Global Depositary Receipt is a tradable financial security. 2. It is a certificate that represents shares in a foreign company and trades on 2 or more global stock exchanges. 3. GDRs typically trade on American stock exchanges as well as Eurozone or Asian exchanges. 4. GDRs and their dividends are priced in the local currency of the exchanges where the GDRs are traded. 5. GDRs represent an easy way for US and international investors to own foreign stocks. Hope this would help. Thanks for watching.